Hello, everyone. My name is Nathaniel Freeman, and this is Freeman's Money. And today we've had a fantastic week looking at GameStop. And I wanted to explain what's happening to you guys who might not understand what's happening with GameStop. Um, it's a really, uh, it's a really interesting event that's happened in the past week. So let's get down to it. GameStop is a stock that went from about $3 a share 2 weeks ago to over $400 a share this week, and all that without the company developing in any sort of manner that would allow for that. The reason that happened is because Wall Street investors got greedy, and people on Reddit saw that they were getting greedy and decided to take advantage of them. So let's get into it. What happened with GameStop? Before we get into that, we have to explain what short selling is. Okay? Short selling is a thing you can do with stocks if you think they're going to decrease in value. So if you buy a $10 stock and it goes and you own that stock because you bought it, the only loss you can accrue is if it goes down to 9, 10, 8, or 0. So you can only lose $10 since you bought it for $10. But when you short sell a stock, you're betting that a stock will go down. So if a stock is at $10, you bet that it will go to 8. If it goes down to 8, then you can make that $2 profit and then own the stock. If it goes higher, then you wind up paying for that stock even more so. So let's explain this. If you buy a $10 stock, you bet that it will go to $8, but it goes to $20. The people that loaned you the stock, the people that you made the bet with, say now you have to buy the stock at $20. So instead of your maximum loss of being $10 if you buy it, if you bet against it, it could be infinite because it can go infinitely higher. So what happened with GameStop is that a bunch of Wall Street investors who bet against stocks saw that the company wasn't doing as good as they really liked it to, so then they put bets against it. But they bet over 140% of the stocks that were in the market. Now, people on Reddit saw this and then announced that, hey, if we buy this stock to make it go up in value, then these guys are going to be forced to buy the stock at that higher price. And since there's over 140% of those stocks being shorted, when they try to buy 140%, that's going to shoot the price up exponentially because let's say they're buying all the stocks they can because they're trying to buy 140%. Sooner or later, they come up to a guy who's not willing to sell their share of stocks. So then the price rises, and then somebody says, yes, I'll sell it for that amount. And then they buy that portion. Now, the other thing with that is these rich investment funds do not like to lose money. So what happens is they shorted the position, the value went up, so they lost a ton of money, so then they shorted it again to try to recoup their earnings thinking that the stock would just plummet back down. Now, Reddit saw this, kept buying in, pushed the price even higher, which caused them to have to buy again, which then shot the price up even more. So we had this kind of battle between people trying to short the stock and maintain their money. Oh, my light just went out. Oh well. But we had this battle between big investment funds trying to short the fund and make their money back, and regular Joes who were just all investing in together, making their money, making tons of money off these bets. But right now we're at this tug of war where as soon as the stock hedges a little bit, it goes down. I think I saw it at like 270, ending on Friday. But it goes down and then it shoots back up and then it goes down and then it shoots back up because there was this battle between them. Now, what happened last week near the end of the week was Robinhood disabled part of the trading for that stock and a few other brokerages too. And we'll get into that another time. But the reason they did it is, well, it doesn't matter the reason they did it. The fact that they did it made people not trust them, which made people lose kind of interest in buying on that platform, which is why you saw a huge amount of people go from Robinhood to Webull or other stock buying apps. But there's also a big push that since that's rigged, they're going into Bitcoin a little bit. We'll cover all that on another video, but that's what happened this week with GameStop. You pretty much had a bunch of huge investment firms betting against the stock, and then some people on Reddit saw that they were doing that, said, you know what, you guys put yourself in a really bad position by betting over 140% of the stock, or the, no, I'm saying the GME stocks, GameStop stocks. So we're going to make you pay for it because we see an opportunity here. So they drove the price up. Wall Street had to buy those shares, and then you just had this cycle of it shooting up, which is why it gained over 1,000% in I think about 2 weeks. So that's what happened with GameStop. If you have any other questions, feel free to ask me. Smash the like button, subscribe to the channel, and I hope you guys have a great week. See you next time.